Thanks everyone for joining the Vision of Future Leaders panel. My name is David Wang. I'm the founder CEO of Bet.Works. We're a US regulated online sports betting platform servicing a number of clients out here in the US. We have a fantastic panel today of leaders within the industry. If you look at the marketplace since PASPA, these folks have taken their companies to all-time highs from a stock perspective, raised significant capital within their companies, and have done miraculous things within the industry. I'd like to sort of give everyone a chance to have our panelists give a brief introduction of themselves. We'll start with Adam Greenblatt of Roar Digital. Adam.
Thanks, David. Thanks for having me. Pleasure to be here. As you said, Adam Greenblatt. I'm not indigenous to the US. You can hear my accent. Spent the last 20 years in the UK. Came over for this project to lead BetMGM. We've renamed from Raw Digital to BetMGM as our hero brand to bring alignment of our corporate brand and consumer brand. We have, I think, as many of the panelists will echo, we aspire to lead in this US market, and I'm just super excited about the fact that this will be the biggest market, regulated market in the world. And so we want to be one of the winners in this.
Thanks, Adam. Christian?
Yeah, thanks. Yeah, my name is Christian Nyland. I'm CEO and co-founder of Kambi. We have been a sports betting B2B provider for more than a decade now. With PASPA, of course, we have had some very nice success. We are operating DraftKings, we're operating Penn. We just signed Churchill Downs, and of course, with Greg in the panel here, we have RSI as a customer as well.
Fantastic. And we'll pass on to Dermot.
Thanks, David. Appreciate it. And thanks for the opportunity to be here today. My name is Dermot Smurfit. I'm the CEO of NASDAQ-listed GAN. GAN is one of the very leading platform providers in the United States, and we've deployed our technology platform for major retail and online-only operators here in the US over the last 8 years. And we have live active deployments across New Jersey, Pennsylvania, Indiana, and soon to switch on Michigan and West Virginia. So very excited to be here. The US opportunity is still immense, and as a platform provider, we get a share in all of the different products integrated in our platform, which includes 9 RGSs today for online casino content, and of course, multiple different sports betting vendors such as Kambi, which are integrated into and delivered through our platform.
Wonderful. Thanks, Dermot. Greg?
Thanks, David.
Go ahead.
Sure. Thanks, David. Hi, my name's Greg Carlin. I'm the CEO of Rush Street Interactive and Rush Street Gaming. Got our start in the bricks and mortar business a long time ago. We currently have our Rush Street Gaming business has 4 bricks and mortar casinos. We started Rush Street Interactive in 2012 with my colleague Richard Schwartz, and we since launching RSI, we're operating in casino in Pennsylvania and New Jersey, and sports betting in Pennsylvania, New Jersey, Indiana, Colorado, Iowa, and we will be launching in Michigan soon. And we use Christian as our sports betting partner. Kambi plugs into our platform.
Fantastic. And last but not least, Kip.
Yep. Hi, David. Thanks for having me. I am Kip Levin. I'm the CEO of Fox Bet, which is part of Flutter Entertainment, and in the U.S., our U.S. business, we are part of the FanDuel Group. So I've been in the business now for past 7 years in different iterations. Started out running the Betfair U.S. business when I first came in, merged that business with FanDuel back in 2018 as sports betting was opening up, and as Fox Bet sort of came under the umbrella of Flutter, moved over to run that. So, I guess if we're talking largely about sports. Have had a front row seat for the last 2 years, seeing everything going on between FanDuel and now Fox Bet. So yeah, excited to talk about everything that we've learned today.
Fantastic. So I guess the first thing I wanted to chat, I thought would be very interesting for the audience to sort of hear the thoughts from the group, is that what sort of surprised you so far in the U.S. marketplace? I mean, we obviously know there's been drastic changes only 2.5 years ago with the PASPA repeal. We're all doing very interesting things. This market is extremely dynamic. We've been all very resilient, but there probably are some surprises, especially a lot of folks here. Obviously, we've been in the industry for quite a while. Maybe we'll have Adam start. Well, what sort of surprised you thus far from what you've seen today versus when you first took upon this role and decided to launch in America? Adam, I think you're on mute.
Sorry, just two things I'd like to focus on, David. One is pace, and the other is cost. In terms of pace, it's just happening faster than we had imagined. It's positive surprise. Both pace of state adoption of legislation, the passage of regulation. And you've seen this morning that Michigan are likely to waive. This is just a micro example. Michigan are likely to waive the review process on regs and go straight to live. Clearly, there's been a lot of work done in making sure that those regs are correct. But there is an urgency to adopt sports betting that frankly has taken us by surprise. So that's the good news story. The pace is also can be applied to the pace at which states with the right regulatory framework are seeing growth of of the regulated sports betting market. I'll give you an example. We launched in Tennessee just 1 month ago. 1 month. So this is a state still on, I don't want to say in diapers, it's even before that. But yet our bet count this month was higher than in the state of New Jersey. And for me, that tells me what we're seeing is latent demand and massive ramp up where the regulations are facilitating. And then cost is the second one. It's just this is a big boys game. It's expensive to acquire. We've got Kip on the line. DraftKings and FanDuel are taking no prisoners. They're investing heavily in the market. So leadership comes at a cost, and that's the other point I wanted to make. It's even greater than what we expect.
Fantastic! That's phenomenal. Dermot, you've been looking at this space for a number of years. We had many chats. Maybe if you don't mind, share some of your thoughts as well.
What's been surprising? Well, there's a whole bunch of surprises, which shouldn't be particularly new to any of my equity investors following along today. But we've certainly seen a far faster ramp up in Pennsylvania than I think anybody expected, not least because of the COVID-19 tailwind in the second quarter of this year. So we've seen online casino grow very, very rapidly in Pennsylvania. And I think we'll see some of these similar dynamics in the state of Michigan because it's a locals casino market as opposed to the destination casino gaming market that New Jersey is. So fast ramp up of online casino gaming. Of course, the accelerant of online sports betting has probably been the biggest surprise, echoing Adam's comments. Sports betting switched on in summer of 2018, and I don't think anybody, even the most optimistic commentator at that point in time, foresaw how rapidly and aggressively the major B2C operators would weigh in with their marketing dollars and expand the market as dramatically as it has been. Equally, I think as a technology vendor, we supply very complex enterprise software and services to a whole range of corporate clients in the US, principally retail casino operators. And I think one of the key surprises that we've shared with our clients is how incredibly fiddly and difficult it is to meet all the different technical regulatory aspects and mechanics in every single state. New Jersey came up with the original framework, all compliments to the Division of Gaming Enforcement there. They've iterated on it again and again and again. So every few months there are new technical requirements to comply with as a platform provider. And the same is true in both Pennsylvania Indiana, and of course, Michigan has its own special sugar and spice to add to the mix just to make their own operating environment as unique as possible. All of that creates a surprisingly difficult landscape to deploy technology into, which ultimately leans towards the state-by-state, intrastate supplier vendor matrix, and we GAN, of course, get the benefit from that. So surprisingly complex technical regulations in each of these individual states. I think that's going to continue, but also surprisingly fast ramp up in online casino, fundamentally driven by online sports betting and the cross-sell from online sports into casino.
Thank you. Thank you. Kip, would you like to add anything to that? I think you've gone through, FoxBet has gone through a lot of changes and growth. Would you like to share some thoughts around surprises that you've seen?
Yeah, I mean, I would echo everything that's been said. I think the one thing I would add is just the size of each market in each state as it goes. I mean, sort of echoing off of what Adam said about their launch in Tennessee. I mean, just the scale of New Jersey alone is pretty surprising. I think we thought, we've been operating the Betfair casino business there since the online casino market opened back in 2013. I think, we sort of felt like we had a good view as to how big the market would be. I think it's probably 2 or 3 times what we would have estimated by now. And every other market has sort of followed suit that we've launched in. So I think, and I agree with the other points, like the pace of regulation, right? I mean, online casino was in New Jersey by itself, for 5 years, and no other states sort of passed regulation. I think we would have expected, to be in 5 to 10, 5 years into it. And if you look at how fast regulation around online sports betting and sports betting has gone compared to that, it's staggering. So I think it's well beyond sort of what we would have expected.
Fantastic, fantastic. So I want to shift gears a little bit on that. Obviously, I think the growth of the speed and the growth of the market's fantastic. I think it's all surprised us. I think this is a much, much larger industry than all of us have even expected. Let's chat a little bit more about innovation, and maybe Christian, you can start off with this, whereby right now, at least from my perspective, we're in the first inning of this industry. It's just going to continue to grow. We're going to have a lot more capital in this industry from different types of investors. We've seen a lot of success with different SPACs. What do you see going forward in terms of product innovation that isn't out there currently today? And if Christian, perhaps you can kick this one off first.
Yeah, I would say that, first of all, if we're talking sports betting, the fundamentals are pretty much the same as they have always been for the last 100 years at least. What is driving innovation mainly is the change in technology. The more access to data we get, the faster and the quicker we can be. And that has been, like, throughout the years in Europe, that has always been the case. Live betting came when the technology was there for it. Mobile became popular when iPhone came out, even if mobile betting was actually a thing several years before. So I think it's very much about how much data we can absorb. And I think what we have seen the last couple of years is that we are able to collate more data, and therefore doing much better algorithms, and therefore we can do a lot of more bet types where you can combine in-game parlays, for instance. So that has been the biggest thing in the last couple of years. Typically for US, I would say that, a lot of focus before for us and most of the companies that have been operating in Europe has been on soccer and tennis. And now we see a massive development in the sport of American football, baseball, and so on. So you will see more and more features of very fast-paced betting. We are already doing pitch by pitch on most baseball games now. This year on the football, we have a lot of bets on the in-drive place type of bets. So I think that is more and more, and it's very interesting to see how well the US betting public are adapting to the product as well. Live betting is becoming a very, very big part of the revenues. And they're picking up new sports. During COVID, I think table tennis became a massive sport in the US, for instance. So I think you'll see more and more sports being more and more popular in the US as well.
Fantastic. No, I think you're absolutely right. Greg, I know Rush Street also has done some innovating things. What are your thoughts on innovation for sports in the future?
Well, as I mentioned earlier, Kambi is really our sports betting partner. Our innovation really evolves around our platform and the kinds of things we could do for sports bettors. We have a proprietary bonus engine, and we've been evolving that to try to offer sports bettors what they want in free bets or boosts, etc. So I think you're going to see innovation around that, and how do you differentiate your product relative to your competitors? We certainly will be key and an important factor for people's success going forward.
Fantastic. And Kip, given with your, I guess, fantasy business as well as media ties, can you share some of your thoughts?
Yeah, I mean, the media angle is an interesting one, right? And I think it ties to both of your questions, right? I think another surprising point has been how quickly sports betting has been integrated into sports media. And obviously in the Fox Bet business, that's critical for us in terms of acquiring customers and building the Fox Bet brand and so on. So I think it's been, fascinating to see how quickly, right? Obviously we kind of launched the Fox Bet Live show on FS1. That audience has grown substantially year on year, and interest in that show. I think the fact that betting is now sort of more talked about, even as we're in some form of sports betting legalized in 20 states right now. The fact that you see pregame shows now where betting is part of the pregame analysis. I wouldn't have guessed that we'd be that far this quickly. And I think the next phase of that will be, right, more and more people are watching live sports streaming, right? And so as the media landscape changes, I think that will open up really interesting innovation opportunities for people who want to watch and talk about live betting. Now imagine you're live streaming an NFL game in an app where you can see your bet sort of wrapped around it and make decisions while you're watching the game with everything right in one place.
With that said, on the media side, how far off do you think we are from an experience of actually betting via your television set or having a deep integration with actually the television set?
I mean, actually, we've just started doing it in one of our businesses in TVG, where you can watch on an OTT app. You can bet on your phone, and your bets are on your television screen right next to the live television broadcast, right? So, and you can actually place bets right there, and they'll appear in front of you on your TV screen as you're going. So I think it's coming fast, and I wouldn't be surprised to see it in a year or two. More example, and again, I think it'll start more around the streaming on a phone or computer experience, but you're with all the connected devices that we have today, I think it's not long.
I think the biggest issue is the pace you can get the broadcast. I mean, if you look at most digital broadcasts, they are 5 to 15 seconds delayed at least. So to get that experience good, you need to get the delay from the real-time data coming down to 1 second at least. And that can easily happen with 5G.
Sure. No, that's a great point. That's a great point for you, Christian. Adam, you want to share some of your thoughts on innovation?
Yeah, look, the first point I'd make is actually it's a difficult environment to innovate, truly innovate in, largely because, I think Dermot referred to it earlier, it's the compliance requirements, in-state compliance requirements, and that we operate in a regulated environment, and every state has a slightly different take on things, means that the cost of participating is high. Which means that the cost of failure becomes non-trivial, and so really that the grassroots-driven innovation is in that, because of that, takes longer and is less prevalent. Having said that, there's a lot of capital, so that's I don't think a black and white constraint. Look, for me, the innovation is driven in two areas. One is driven by engagement, and the other is on value. And so the themes that we're seeing now are on player engagement. There's quite a lot of focus on content. There's quite a lot of focus on free-to-play. There is an open question on what do we do as operators. How do we really de-seasonalize what is a very seasonal sports betting, what is a very seasonal sports calendar? What in our business, what we saw is football players from last season didn't want to bet baseball, right? What we saw at the baseball at the big post-COVID now, baseball was the first sport back. So we saw a lot of players trying new things, players where we had history on trying new things. But frankly, there was a return to normal when preferred sport returned. Now, the question is, what happens to those players in due course? Wow. Are we supposed to keep talking? I don't know. I obviously said something wrong.
Please continue. We're back.
Oh, goodness. Okay.
David, I'd like to make a couple of comments, if I may.
Go for it.
Sure.
Thank you. Yep. So innovation is a really interesting intellectual debate about what is a true innovation and what is simply an iterative innovation where it's slightly better than something that exists today. And over GAN's history, we've focused very much on creating genuine innovations. And probably one of the biggest was when we were the first company to integrate a casino management system with an online gambling platform and link the concept of a rewards account in a casino management system with an online gambling account, whether it's used for social gaming or real money regulated gaming. And that created a huge amount of value because ultimately you've got a combination of visible innovation and invisible innovation, which from the consumer standpoint, and you have to kind of drive through the prism of what the consumer wants to see, and convergence between retail gaming and retail rewards programs and online gambling and online rewards programs is perfectly logical if you, again, just look through the eyes of the consumer. So innovation means very different things to different people. To financial engineers, it will appear to be incredibly risky, but from technology vendors such as GAN, it is critical to maintain and sustain a market position. And actually the convergence intellectual property that we generated, created, and jealously protect is one of the key bits of innovation as we've seen it in the industry over the last decade, slightly less than a decade. And it's one of the things that I think all the retail casinos will still need to progressively unlock as they continue to move online, because the investment in their retail rewards programs has been phenomenal over the years. And all of that investment needs to be properly surfaced to the end user consumer when they're active in the online channel. And David, I know you've got a lot of experience this yourself through your history at both MGM and Wynn.
No, absolutely. Absolutely. And there's one point that Adam mentioned earlier, I think it's very relevant, very interesting, and I want to kind of touch on, which is it's very difficult, obviously, to innovate completely with real money gaming. It takes a little bit more time. And right now, obviously, with free to play, that's a lot more flexible, and there's a lot more things we can do. So Dermot, I know you obviously have been in the free-to-play sports or casino industry for some time, or you have products around that. Maybe share some thoughts around how you see free-to-play going forward.
Well, we're going to see much more instances of free-to-play sports betting. We've just deployed a simulated sports betting product offering as an extension to our simulated online casino gaming. When we say simulated, we're effectively a proxy term for social casino gaming delivered to our retail casino operator customers, fully integrated into their casino management system and their rewards program. It works a treat, and we've actually been surprised at the level of adoption of simulated sports betting and the frequency of fake money bets being placed in the system, and the consequential revenue impact as those simulated sports gamblers bet on sports, follow their favorite sports, and become increasingly engaged online. So I think we're just going to see an increase in prevalence of free-to-play sports betting, particularly in advance of a regulated real money gambling market commencing. And we've deployed several months, if not a year, in advance of expected regulation of real money sports gambling in the state of Ohio, and it gives our clients a significant competitive edge to start engaging and gathering a significant sports gambler database in advance of the market actually commencing.
Fantastic. And Kip, I know your business, you have quite a few different product lines, including quite a few non-sports betting applications. Maybe share with us your views as to how free-to-play will be introduced in the future. Free-to-play is something that, for me here at Bet.Works, it's something we're spending a lot of time on. It's something that we're putting a lot of resources behind in terms of innovation and finding different solutions. But I think it'll be a very relevant topic, I think, for the industry going forward. So we'd love for you to share some thoughts.
Yeah, I mean, it's very central to our strategy. We have the Fox Bet Super 6 product for people who may not be aware. I think it's been the number1 free-to-play sort of sports. It's not betting, but it's somewhat like betting. Since the start of the NFL, it allows us to a product that we can sort of better integrate into the national programming on Fox, and we've done it across a number of different sports. We've even had quite a lot of success doing it during the final presidential debates in the election. For the election, I think by itself, we created a Super 6 game that had over a million entries in it. So for us, it's been a great way to sort of tap into a national platform and build a database of people who are largely recreational, but also convert very well to sort of full sports betting and or casino players. So I think I do agree. I think it will continue to evolve, become more prevalent. If you look at, obviously for our business, a lot of what we've done is sort of taken the playbook from the Sky Bet business and replicate it here. And it's, I think the numbers this year have been staggering to sort of see the growth.
And in markets where there's real money betting for sports, have you seen strong crossover and conversion with play for free as well as real money sports?
We have, and it's it's gotten better as the season's gone along, and we've put sort of more of the hooks into the product. But and people play both, right? And I used the example of the TVG business before. We've run a free-to-play game on Saturdays there for the last couple of years. I think on any given Saturday, we have something like, and that's in a vertical that's largely legal and available for sort of free money betting. On any given Saturday, we might have 50-60% of our actives also playing along with the free-to-play game. So it's not just about acquiring customers in states that haven't yet legalized. It's also just a great way to engage and keep your actives up. And certainly it was critical. If you look at the FanDuel business over the course of the sports shutdown, we shifted very, very quickly to building out different free-to-play games to keep largely our daily fantasy actives up and engaged, and that strategy worked really well.
Fantastic. Another topic I wanted to touch on, which doesn't get as much limelight these days, is retail sports betting. Here at Bet.Works, we're currently live in 3 land-based casinos. We're live in Iowa as well as Colorado. Greg, I know you have experience with this. I'd love for you to share some of your views in terms of how you see retail playing out in somewhat of a digital world. Is there a significant retail strategy going forward in the marketplace, and your outlook for how retail can fit in a organization's strategy?
Sure. So with my Rush Street Gaming hat on, the bricks and mortar casino business, I think what we've tried to do at all 4 of our bricks and mortar casinos is build a compelling, retail sports book, and it's really been additive to our business. If you look at, all our properties, we spend a lot of money on the AV system, the seating, food and beverage, just the experience. And, what we've seen is we've seen a lot of new faces. We've seen younger faces. We've seen, retail sports. That business has been successful in itself, but it's driven slot revenue, table revenue, food and beverage revenue. And it's also been a great way to sign folks up for mobile. So, from our perspective, it's been, a good additive to the business. I think, when you think about omni-channel, even though digital sports betting is in some markets, 80% plus, 90% plus, having retail as a component, I think, is really helpful and drives the overall business and leads to a bigger pie.
No, fantastic. No, it's great to see the success. And Christian, Kambi's obviously deployed with Rush Street. You're in a number of states with a number of partners. Please share some of your thoughts as well in terms of how you see retail, how that's going to play out in the future in terms of strategies for iGaming companies. Christian, I think you're on mute, by the way.
Sorry. Yeah.
Okay,
yes,
perfect.
Yes, I think outside of Nevada, we have actually deployed more sports betting outlets in retail than any other company. With Rush Street, as you say, and the rest of our network. I think one thing, just tying back to innovation before, innovation doesn't have to be very costly and expensive. One thing we have done is what we call bring your own device, where you can place your bet in a bet slip just like you do online, and you get the QR code and you bet at the cashier, which in COVID times obviously have lowered the queues quite significantly. But it also helps the customer to convert into mobile when mobile becomes available, since in many states it will come as a second step. And I think that's probably where we see how retail will play out. It will be very, very important for the next 5 to 10 years. But the future, I'm sure, sports betting lends itself much better to being able to be placed on your mobile phone, for the simple reason that you're not always in a casino when a match starts. Casino, you can choose when to place your bet yourself, but if you're doing in-play betting, you have to be in the casino at a certain time. So long term, I'm sure most of betting will be online for sure.
Absolutely. So at Bet.Works, I went through quite a kind of experience in terms of the financial markets or just the general investment groups that sort of become interested in this space. For most of us here, we've been involved with this for quite a while, and I know 10 years ago, the types of companies that were interested in investing in gaming were few and far between, or at least from a digital perspective. And now we're seeing major family offices to media companies to SPACs and everything else in between super interested in this space. What are some of your thoughts around do you see this trend continuing? Do you continue to see, do you guys foresee a lot more M&A activity? I know Dermot just went through a very successful acquisition with Bet. Perhaps Dermot, you can start, but I'd like to hear every one of the panelists sort of chime in on this point. Dermot, you've gone through a very significant transaction. You see a lot more of these coming. Are we at a point where there's going to be a lot of consolidation in industry in the near term?
Well, David, thank you. If I rewind 5 months ago, we could have principally initiated a review and ran the slide rule over a lot of different European companies with a view towards evaluating and seeing if there was genuinely a better team, product technology, and operational experience that could kind of result in GAN bringing a highly competitive sports betting offering into the US over time. And that's what we feel we have found and secured as part of the already announced Bet acquisition. And we very much look forward to bringing it to the US market very early in 2021. The difficulty and complexity of M&A in the COVID environment, the continuing COVID environment, is incredible, and you've just been through the process yourself. So whether it's basic financial, operational, technical due diligence, it is incredibly complex in a COVID environment where certain travel restrictions apply, some of which are surmountable and others which are insurmountable. However, I do think M&A will continue. I think it's going to be a very, very active space, both from the investor's perspective and from the industrial combination standpoint, where logic will compel certain companies to combine with others over the course of probably the next year to 18 months as all of the positioning takes place. And with the Bet acquisition, we feel that GAN is incredibly well positioned for all of the future expansionary opportunities, not just in the states we're in, but also the states that we're deploying into for Churchill Downs and other corporate clients of ours. And it's an active space where I think bankers are going to make a lot of fees, and some of the transactions will fail, but many of them will absolutely succeed, such as our own.
Fantastic. Anyone else in the group would like to chime in? I know obviously Bet has done lots of interesting things. BetMGM has, and all of us have sort of had many of these types of discussions in the past, but love for the group to kind of share some thoughts around this.
David, you should answer your own question. You're involved with a big transaction recently.
No, that's the moderator. No comment for me. Anyone else would like to share anything? I guess I'll share some general stories. I think from my perspective, iGaming 10 years ago, we never saw much valuation, right? I think we were always different for whatever reason than traditional Silicon Valley technology companies. Venture capital community never really looked at this that closely. But I think, again, it's fantastic that via, I guess, all of you folks here as industry leaders, we're able to do this, to run this industry properly. We're able to keep things compliant. Since PASPA, I don't think there's been any negative stories in the industry from sports betting perspective. And we're getting a lot of more folks educated around this. And I think, this will just continue to grow and grow. Adam, what are some of your insights around this?
Yeah, look, Dermot actually covered it briefly in his comments. One of the things that's driving that will be driving M&As is just the TAM. Where there is common ground is the expectation that there is a huge market opportunity here, and the access points. So 2 things. One, the valuations that we are seeing of those, our competitors, some on the call, of those in the public markets are really impressive. And what that speaks of is investor demand for exposure to that TAM. And so we're in the process now of figuring out who are going to be the long-term winners, premium ascribed to the early indications of who those might be. But the routes into exposure to that TAM are still being formed. And for me, the driver of M&A are creative ways to find exposure to that TAM, one. And as Dermot said, positioning to increased chances of being one of the long-term winners. And I do think, though, that based on what I see, there is quite a wide range of expertise on the demand side. And so while some are incredibly expert and insightful, some are, still at the big, relatively early stages of the learning curve. And my only word of caution would be that the enthusiasm to achieve exposure and to commit capital to the sector without really understanding the sector dynamics, oftentimes that doesn't end well. That's, and from our perspective, I think it's just great that there is so much enthusiasm for the sector. And that's it.
Absolutely. No, that's fantastic.
Well, no, I think to your point, Adam, I was just going to say that,
Sure.
It's a highly competitive market. And as you said, David, it's really the first inning. And there's lots of competitors trying lots of different things, both on the customer acquisition side as well as the retention side. And it'll be interesting to see. I think we're in the early innings. It'll be interesting to see how all these different strategies play out. But certainly, I think you're going to see consolidation, over the midterm, as not every company's going to either have the capital or the built the business to survive the scale of it.
Absolutely. No, great points. Let's open up to some Q&A. We have quite a few questions already from the audience. And we'll just open this question up to the group. It's from Omar Dor from Sports IQ. What do you believe will be the role that product innovation plays in driving true competition? Anyone here want to take a stab at that first?
Well,
yeah,
go ahead. I'm sorry. Go ahead.
I'll jump in to start. I mean, I think it's going to be critical long term, right? Which is obviously why you see a mix of the platform providers on this call, along with the operators, right? It's complex right now. I think a lot of our product investment is around launching new markets today, right? And probably, if we could choose, we'd have a lot more invested in just core innovation. But I think as you get through this sort of early wave of kind of rapidly expanding into new markets, then it will become critical, right? And it's just like any other market, right? Where, I think the example I use most recently is, you had every sort of major tech company that was in the video conferencing space, and Zoom comes along during this pandemic, and they had the best product, and you look at what's happened to that company. So product will ultimately win the day long term, and and so I do think it will be core, and ultimately the people that are sitting around sort of with the biggest market share, 5 to 10 years from now will ultimately be heavily correlated with the companies that have invested most in their products.
Absolutely. Anyone else have any other input on that question?
Yeah, I think one note to look at now when you talk about that is how many companies are trying to develop their own sportsbook through acquisition, and I just want to highlight it. I mean, it will take a lot to be able to compete on product doing it in-house if you're not one of the absolute largest. And you can see in almost any industry that matures that you're not really capable of doing it in-house. I mean, if you take the mobile industry, so two of the giants in Nokia and Ericsson becoming obsolete because they didn't manage to compete with their own platforms.
Sure. Okay, no, great points. Our next question is from Brian Hatch. What is each company's approach to responsible gambling? What are they doing to protect consumers against developing addiction? I think it's not it's an important question. It's not something that we talk about enough in the industry. Is there someone who'd like to
I'm happy, David, I'm happy to take that. I mean, from the pure technology standpoint, here in the US, in the GAN platform, we've had to develop an extraordinary range of technical regulatory compliance mechanics, which ultimately benefit the end user, consumer, and gambler. And I think here in the US, it's completely different to how the European industry has evolved over an extended period of time. I think in Europe, it's been and has been in certain areas still a continuing Wild West environment where regulatory oversight and regulatory determination to implement amongst the operators proper regulated responsible gambling has been highly variable. In other words, in some licensing jurisdictions, it's a light touch, and in others, it's extremely prescriptive. Here in the US, from day one, and very much again, a nod towards the Division of Gaming Enforcement in New Jersey, they had a very fulsome matrix of technical requirements if you wanted to go live and launch internet casino gaming in order to protect the consumer in the way that retail casinos here in America also protect the consumer. But in the online space, we've got so much more information on the level of activity and the individuals involved with no anonymity afforded. I think each one of the states, whether it's New Jersey or Pennsylvania or Indiana or soon coming Michigan, they all have their own very sophisticated approach towards requiring technology platform providers like GAN to implement extremely sophisticated player protection measures to ensure we don't end up in 20 years' time in the same situation that many of the jurisdictions in Europe have ended up at, where the political aspects of the government are at extreme loggerheads with a lot of the major B2C operators. So I think because the US originated from a point in time where they said, look, regulatory protection of consumers is incredibly important in the retail space and even more so in the emerging online space, I think we're going to have a very different experience over the course of the next 2 decades of unparalleled growth.
Yeah,
absolutely.
If I can perhaps offer an operator perspective on that, I agree with you, Dermot. And for us, operator lens, this is a requirement to ensure long-term sustainability of our US market. And this is our operator-led and supplier-led opportunity to avoid the pitfalls that many international markets have experienced. And so the answer is get ahead of it. And yes, certainly the requirements of individual state regulators are great, but we want to lead in this area. We, BetMGM, are going to lead in this area. So not only are we deploying and have deployed lots of tools which put the power to ensure responsible play in the hands of our players, but we are going further. So we have, through our proprietary technology supported by GVC, we have also developed player monitoring algorithms and have linked that with proactive outreach to players who demonstrate markers of harm. And we have a red, amber, green traffic light system of concern. And so our objective is the same as actually the regulators, which is to make sure that all of our players engage with us to achieve an entertainment experience rather than create something which causes harm. And this is an area where we on the call are going to have to work together to ensure that we avoid the return pendulum swing, if you like, if we don't get this right.
You're absolutely right, Adam. Those are great points. Here's an interesting one in terms of the next question from Dylan Patel. I'd like if Kip and Adam can kind of chime in on this one. I find this question very interesting in that right now, obviously, we all know that it's a marketing war out there in terms of acquiring customers. At what point do you think B2C operators will look to shift gears a little bit and focus a little bit more on profitability versus gaining market share or gaining user base?
I mean, I think we are very focused on both. Obviously everything that we do from an acquisition spend standpoint is with a long-term view on customer value, sort of, when you're going to get a return in cost. I think so look, I think it's, early days in some of these states, right? You're still learning, and obviously the values, I think Adam would agree with this, right? The values are different state to state, and certainly the states where you have gaming as well make it easier to spend more to acquire, because you sort of earn back on that faster. So I think, look, I think every state is a bit different. It's almost like it's Europe, where every state's a different market that you're going into. And so I think you'll start to see a world right next year where we will be profitable in the early states, and as you get sort of 2-3 years into launch of a state, those states start to pay back, and then that just creates more investment that you can put into new states that you're launching. So I do think that it's a bit of a misperception that there's no eye towards profitability. We absolutely have an eye on that. It's just different because every market is timed slightly differently.
Correct, absolutely. Adam, care to share some of your thoughts?
I mean, what Kip's outline is exactly the way it is. There are some uncertainties, no doubt. Season to season player return, long-term value. We're talking about things like 5-year player value in sports with no gaming in a new state. What we have is a narrow time base of experience to draw from and extrapolate from. Based on what we can see and measure, are we investing in a responsible way, financially responsible way, to continue the responsible theme? Absolutely, yes. But Kip's other point is incredibly important to appreciate, which is every state has its own particular dynamics, player value dynamics, cohort dynamics, return dynamics. But like Kip said, we are aiming to achieve state profitability probably as we get into year 3. But also to dispel a myth, at a cohort level, which is frankly the building block of everything, at a player cohort level. So we acquire a bunch of players in November. How does that cohort survive, and what is the value of that cohort, and how do those cohorts layer on within a state, and then how states layer on to each other? That profile, the building blocks of that profile, will determine aggregate profitability. And based on the almost the most basic atomic particle, that player cohort, we have great confidence on the unit economics that we're seeing. They are different by market, they are different by state, but we're investing in a rational way in each state. That's what I'd say.
No, absolutely. Great points. Yeah, personally, I think marketing acquisition, in some sense, this isn't probably what the financial folks want to hear, but I actually personally think it could be even treated as CapEx in a certain standpoint in terms of the foundation of building a digital business. Okay, great. We have a lot of questions, but I actually just want to close this off with one more, as I know we're very short on time, but as I think everyone on this call, everyone on this panel has obviously a tremendous amount of experience. I think it'd be fun, or it'd be interesting for the audience to kind of hear what your predictions are for our industry over the next 10 years. And we'll have, let's have a Christian start off. I'd like everyone to have some answer. Christian, you might step away. Let's have Kip take this one first.
Yeah, look, I think 10 years, this is the sort of common question. If I had a crystal ball, look, I think, sports betting is obviously moving fast. I think, unfortunately, still going to take some time to get the larger states out. But, my expectation would be that in, the 5 to 10 year range, you would have it, virtually the majority of the US, mobile, ideally everywhere. And, I think that, look, as I said before, I think you'll really start to see product innovations sort of kick into a new gear once you get through this early phase. You know, and what that means, you know, could be a number of different things. But I do think, you know, as I said, we are very, very focused on the media space, obviously through the Fox partnership, and how that will evolve. Obviously, people's viewing habits and consumption of sports is changing. You look at, you know, the sort of next generation of you know, sports betting, or even just sports fans in general. I think you know, you will see a shift towards more sort of micro, you know, betting and gaming. Whether it's, and by the way, whether it's real money, free to play, I do think that there is a long-term important future in the free to play space as well, right? Because it's you know, people just want to interact, right? And I think our numbers that we've seen in the free to play, the Fox Bet Super 6 game are pretty staggering. And I think that's just early days, right? So you'll have some sort of gamification around just about everything that somebody you know, sits down and watches. So I think there'll be a lot of evolution around that.
Absolutely. Dermot, you want to take that as well?
Sure. Yeah. I mean, I'm always interested in trying to game theory out what happens next, both short, medium, long term. And I've been at this for 18 years, and I'm happy to do another 18. But looking at the 5 to 10 years, particularly up towards the 10-year continuum, you are probably looking at seeing some market access deals begin to expire or come frighteningly close to a cliff. So I always wonder and postulate, well, what happens next? You've had a lot of major retail casino operators and small retail casino operators effectively outsource the internet gambling opportunity to third parties, a lot of the European operators, a lot of the online-only operators, and that will continue because that overwhelming bag of cash and relatively easy non-operational participation in the internet gambling market is of course lucrative and exciting. But build it out 10 years, and you are looking at a TAM of, you know, $25 to $30 billion, split 50-50 between online casino and online sports betting, with sports driving the casino. And you probably have to accept that some of those retail casino operators will choose to let the market access agreements fall away and start looking to do it themselves. So I think one of the consequences of that is I think we're going to see some of the online-only operators that are currently very active in the space either merge with retail casinos or actually go and acquire small retail casino operations of their own in order to ensure continuity of their online operations. So that's my forecast. It's a long-term forecast, but I think the Caesars William Hill merger is perhaps one of the earliest indicators of that direction.
Absolutely. And Adam?
What an exciting question. What I think we will see is that the US is indeed the world's largest iGaming and sports betting market. I think we will see you know, staying with the theme of M&A and consolidation, I think we will see a narrowing of the field. I think as a result, the cost of participation will be too high for those not in the leading group. And to Dermot's point, I think that might well free up some routes to market access. Taking it even more global, I think we will see increasing mega mergers. I mean, get through the wave of rollout. We will see mega mergers, perhaps even which means that the differences between the US landscape and the international landscape, those two things will come together. I think the economies of scale in our sector will drive that. At a more micro level, I think we will see poker have a period in the sunshine. I think we will see shared liquidity across all states and perhaps an adoption, more broadly adopted poker industry, and the US will once again reclaim its position as a leader in that product vertical. Otherwise, let's have some fun.
Fantastic. Well, thanks everyone. I think great to see everyone virtually. And stay safe. I think this is a great panel. Appreciate everyone's feedback. And we had, again, quite a few other Q&As that unfortunately we're not going to be able to get to as we met our time limit. But a great seeing everyone, and thanks again.
Thanks, David.
Thanks.
Thank you.